It was a week ago that Tesla said it would be slashing its prices here in the U.S. as well as in Europe and other parts of the world. And after that, what happened was a surge in interest in Tesla vehicles. These are new numbers from Edmunds, which tracks how many people are looking at websites of different automakers, different vehicles. The Model Y, now the second most researched vehicle. It was something like 60th the week before. The Model 3 has jumped from 30th up to number 11 in terms of the most researched vehicles.
In this video, some bizarre insinuation about what motivated Elon Musk to sell Tesla stock recently, some stunning insights following a survey of Chinese consumers about what brand of EV they're considering buying in 2023, spoiler alert, Tesla, the laughable plans of Tesla's so-called competition in the United States, and some folks in the mainstream finance media once again prove they don't really know what the f they're talking about when it comes to Tesla. Surprise, surprise. By the way, if you want more content, close to 300 exclusive videos and my Tesla price targets, head over to Patreon, join now with the card in the corner or the link in the pinned comment. There's something there for almost everyone. Well, actually no. If you're infected by the woke mind virus, professional victim, virtue signal for a living, are afraid of facts, have a sensitive butt, probably nothing for you. But for everyone else, head over to Patreon now. You probably won't regret it.
Moving on to, guess what? Elon Musk continues to make headlines as the Tesla CEO may have bended some of the SEC rules. Musk sold nearly 22 million shares of Tesla prior to the company reporting fourth quarter delivery numbers that came in weaker than expected. Now, the timing of Musk's stock sales certainly raises some questions. Brad.
Yeah, it does, but it's also what needs to be proven if the SEC does decide to look into this as well.
Trying to make something out of nothing. This is absolutely absurd. Now, if you're unaware, Elon Musk sold Tesla stock many times in 2022. Many times in 2022. Most of these were pre-arranged sales. If you don't know, I know this is crazy, but Tesla every quarter reports quarterly results. Crazy idea, I know. First, they report their quarterly deliveries and production, and then they report their quarterly earnings. Now, bear with me here, folks, but if Elon Musk is selling consistently over a period of many months, does it not then follow that there'll be some quarterly results occurring during, before, or after some of these stock sales? I know this is a real stretch, but if Elon was planning on selling Tesla stock and then he sold Tesla stock, is it possible that he was planning on selling Tesla stock and he sold Tesla stock? The end? Is it really likely that Elon Musk is strategically timing this sale of his Tesla stock perfectly to align with quarterly results? Oh, this is a bad quarter, better sell before the quarter so I can sell them while they're still high. This is just absurd. Now, for those who don't know, I've been buying Tesla stock with every spare cent since the beginning of 2016. Every time I got money, I buy Tesla stock. Now, hypothetically, let's just say that I was an insider at the company and I was working, I don't know, the 4680 cell or some other technology. And it just so happened that I had a little bit of spare money. So I bought more Tesla stock the same week that there was a huge breakthrough or massive milestone was met within Tesla. And then there was some discussion about whether or not I was intentionally trading on insider information because I bought Tesla stock around the same time that there was an event that was bullish for Tesla, the company, without accounting for the last 6, almost 7 years worth of buying activity, which is I got money, I buy Tesla stock. The same logic applies to Elon's sales here. He sold multiple times, and the reason he sold is because he sees us heading into a recession in 2023. He buys Twitter, the burning dumpster fire that is, and needs to ensure that in the absolute worst case scenario, Twitter can survive until they're cash flow positive through an epic recession. The truth is, the timing of Elon's sales couldn't have been worse. He's not trying to squeeze out every last drop or sneakily sell stock before some bad earnings results. The dude's like, well, recession, Twitter's bleeding more money than I thought, better sell some stock. Is that enough money? Maybe not, let's sell a little bit more. He didn't negotiate to sell shares in huge blocks privately. If he had of, the stock price probably wouldn't have collapsed anywhere near as much. He would have got more money. I can't believe this is even being insinuated.
Because at the end of the day, any type of insider trading allegation or a charge that would come forward, there's proof of communication that needs to be proven there. And so that proof of communication and the time correlation of that communication is what's key if there was to be any investigation that does get triggered. But it is a critical question as to what the original intent of his sales of that stock was. We know it largely kind of in public to be time correlated to when he was trying to finance the deal for Twitter. Right. But there is the larger question of what he already knew about the company and Tesla and some of the operations there and the health of the company that I think the SEC, if anybody over there is reading the story this morning, they may be interested in.
No comment there. We've seen this story. It's Elon. Yeah. He might get a slap on the wrist.
Right.
I don't see much happening.
We saw a similar story at the beginning of 2022 as well. Yes. I believe February 2022. He and his brother Kimball Musk.
He's got a heavy trigger finger, a heavy tweet finger, and now he's the CEO. Square that. Yeah, SEC, we'll see.
In the market for a Tesla, now might just be the time to head to the dealership.
Melissa, This is awkward, but Tesla doesn't have dealerships. You just order online, direct to consumer. Does no one at CNBS know this? The producer doesn't know this? Melissa doesn't know this? It's kind of an important thing for these folks not to know. Maybe it was a slip of their tongue. Maybe she meant the showroom, in which you still can't actually buy a Tesla unless you whip out your phone and order it online while you're in a showroom.
It was a week ago that Tesla said it would be slashing its prices here in the U.S. as well as in Europe and other parts of the world. And after that, what happened was a surge in interest in Tesla vehicles. These are new numbers from Edmunds, which tracks how many people are looking at websites of different automakers, different vehicles. The Model Y, now the second most researched vehicle. It was something like 60th the week before. The Model 3 has jumped from 30th up to number 11 in terms of the most researched vehicles.
Well, geez, who could possibly have seen that coming? Surely not me. If I had have seen this coming, I might have said something along the lines of, if Tesla were to reduce the prices of their vehicles a small amount, it would create an exponential increase in demand. In fact, I may even have said a linear decrease in the price will cause an exponential increase in demand. I may also have repeatedly referenced Tesla's master plan on their fucking website, which explains their plans to drive the cost of their vehicles down to massively expand the total addressable market to achieve their mission of accelerating the world's transition to sustainable energy. Dear ladies and gentlemen, this will keep happening. Tesla will continue to drive the costs to produce their vehicles down. There'll be temporary ups and downs, but overall the trend will be down. They will also continue to scale up their production of their vehicles, benefiting more from economies of scale, large supply contracts for lots of parts and components, giving them a huge competitive advantage on price. And because Tesla continues to drive their total cost to produce vehicles down, this will automatically give them the option of continually reducing the price of their vehicles over time. And yep, that's right. Linear decrease in price causes exponential increase in demand. So the fact that there has been an absolutely enormous surge in interest for Tesla vehicles following price cuts should surprise approximately no one. And when it happens again and there's another surge of interest in vehicles produced by Tesla after the next round of price cuts, nobody should be surprised when there's another surge in interest and orders for their vehicles. This is literally Tesla's plan. This is how they get to 20 million plus vehicles per year. For what it's worth, my average selling price for Tesla vehicles in about a decade is just under $30,000 US. Today it's about $55,000 US. Clearly, I'm personally expecting Tesla to massively decrease the price of their average vehicle sold by reducing costs, scaling production, and introducing new, more affordable models.
As a reminder, these were substantial price cuts that Tesla initiated on the Model 3 and the Model Y. How substantial? About 6% or $3,000 on the Model 3 and about $13,000 or just under 20% for the Model Y. Well, that's good news if you're in the market to buy a Tesla. Not so good if you're somebody who has one and says, hey, maybe I'll cash in on the interest that's out there. Why? According to Edmunds, the January average used Tesla price was down almost $18,000 since June. Now, the high was in June. It's come down about $18,000, about 24%. In terms of a percentage, that is a much larger drop in a used Tesla percentage-wise than for the market overall. I think the market overall was down 11%. Used Tesla's down 24%. Don't forget, we get Tesla's Q4 results next Wednesday. I suspect a lot of questions for Elon Musk during the conference call. If he's on the call, we expect that he probably will be. And the real question is going to be, guys, what is happening to the auto gross margins? 26.8% is where they were at in the third quarter. Many believe they're going to come down substantially when they report their Q4 results. And then, of course, the question becomes, where do they settle out, if you will, in the first half of this year, if not later this year?
Here we are over on the Barron's website. Tesla price cuts a huge success. Market share grows in China. Investors can see the positive impact of Tesla's vehicle price cuts on Tesla stock. And now research shows the move has boosted sales and market share. I mean, holy shit, imagine that. Reducing prices, boosting sales, and therefore market share. You obviously need a PhD to understand this shit. Goes above my head. Tesla cut vehicle prices in China, most recently on January 6th. So Wedbush analyst Dan Ives conducted a survey of 500 Chinese EV buyers in mainland China to gauge the impact of the cuts. Quote, our survey found that 76% of EV Chinese consumers are considering buying a Tesla in 2023, with the nearest domestic competitor, BYD, in second place, followed by NIO in third place. So, for the record, a sample of 500 consumers. It's actually a pretty good sample size. You're not going to get much more accuracy surveying 5,000 or 50,000 people. The fact that 76% of Chinese EV consumers are considering buying a Tesla in 2023 is definitely obviously fake news, because that's not what the short sellers and the bears told me, because there's no demand and Tesla's a failure in China. That's why they're having to export from China. It's not because it's the main export hub. Considering doesn't mean will, but this is enormous. Just imagine if approximately 3 out of every 4 consumers in China who are thinking about buying an electric vehicle are considering a Tesla among their choices. I mean, this is really stunning. They are, after all, a foreign brand, so they're fighting an uphill battle. A lot of Chinese consumers will want to support local Chinese EV makers. Tesla's market share of battery electric vehicle sales in China is between 10 and 15%. The survey results point to some share gains for Tesla after the company cut prices early in 2023. And again, going back to my earlier comments and Tesla's own fucking master plan, this will keep happening. Prices cut, more consumers buy a Tesla vehicle, costs come down again, prices get cut again, more consumers buy Tesla vehicles again, on and on and on and on, until total domination. Quote, the survey says on Tesla's recent price cuts, they're a huge success story so far, added Ives. Nearly 70% responded that the most recent price cuts have positively influenced their decision to more likely purchase a Tesla Model Y, proving the price cuts have been a home run success out of the gates. There is other evidence the Chinese price cuts have had a positive impact. City analyst Jeff Chung tracks weekly car insurance registrations in China. Almost 13,000 Tesla vehicles were registered in the week following the January 6 price cuts, up from prior week registrations of about 2,100 vehicles. It's still a little early to confirm how US price cuts are impacting orders for new vehicles. Tesla cut prices in the US on January 12th. Why Tesla cut prices in the US feels obvious though. The EV incentives. The corrupt EV incentives. A low-key government bailout / handout for government motors, which miraculously somehow did not consider Tesla's SUV, the Model Y, to be an SUV. You can't make this shit up. Brazen corruption right out in the open. Quote, order trends in December 2022 benefited from discounts and supercharger incentives that required delivery of the vehicle to occur prior to the end of the year. Yipit data found that orders in the first week of January dropped roughly 75% compared with the final weeks of 2022. The company didn't have results in the week following the cuts. Those data should be available soon and can shed light on how US price cuts have influenced buyer behavior in this country. Spoiler alert, more people buying Teslas, more people ordering Teslas, more people considering buying Teslas, more people researching Teslas. Sorry to ruin the end of the movie for you guys. Early signs point to a similar reaction to price cuts in the US that Ives discovered in China. Imagine that. Automotive and car buying information provider Edmunds wrote the Model Y became the most searched vehicle on its website in the week following the cuts. The Model Y moved up 69 spots. Nice. The Model 3 went to the 11th most searched for vehicle, up 36 spots. More buyer activity should drive more sales. The Wall Street consensus for first quarter deliveries is now at about 445,000 vehicles, up from about 438,000 at the start of January, according to FactSet. The lower prices have resulted in lower earnings estimates though. Wall Street's consensus earnings per share estimate for 2023 is now about $4.80, down from about $5.50 at the start of the year. Coming into Friday trading, Tesla stock was up 15% since Chinese price cuts were announced. The Nasdaq Composite was up about 5% over the same span. Ives rates Tesla stock a buy. His price target for shares is $175 per share, and spoiler alert, it's going to be increased half a dozen times throughout 2023, chasing after Tesla stock. You can count on it. Overall, about 64% of analysts covering Tesla stock rate shares a buy. The average buy rating ratio for stocks in the S&P is about 58%. Why how times change? Previously, most analysts on Wall Street were not recommending investors buy. And now the vast majority are, well above the average on the S&P 500. And I still don't think most analysts get Tesla. I just think Tesla's now so effing cheap that they can't help but recommend investors buy it. And now over to the folks at Yahoo Finance to share some thoughts and insights about Tesla and their concerns around demand. Seriously.
Elon Musk is part and parcel of the Tesla story, taking the company to extraordinary heights, but now distractions with Twitter, demand concerns in China, and strong competitors are sneaking up on the company that once had the run of the place. Let's take a look at some of Tesla's main challengers. GM, the sleeping giant in the EV world, took its time developing a strategy centered on its Ultium battery platform. We're now going to see 3 EVs come out this year alone, joining the Chevy Bolt, Hummer EV, and Cadillac Lyriq. GM wants to build 1 million EVs annually by 2025.
So just making sure everyone's clear, General Motors' publicly stated goal, according to Yahoo Finance, is to sell 1 million electric vehicles per year in 2025. Same number of vehicles Tesla sold in 2021. Not 2021. General Motors approximately half a decade behind Tesla, just in terms of their targets, because Tesla's already sold 1 million EVs. And General Motors is telling us they intend on selling 1 million EVs. Very different things. Now, I wish GM the best, but they're moving too slow. They've got an incompetent CEO. They're misleading investors, deceiving them, outright claiming that they plan to be the #1 EV maker and this, that, and the other. Stuff that is counter to reality. They know Tesla's own goals. They know Tesla's current levels of production. Yet they still make absurd anti-reality statements about their EV goals and being the #1. I mean, if anyone's actually buying the BS from Mary Barra, I'll be surprised. She's a politician, not a CEO. All talk, no walk. Won't end well for GM.
Then there's Ford. The company already selling thousands of Mustang Mach-E's and Ford Lightning pickups right now. CEO Jim Farley splitting up the company into an EV business and a legacy gas-powered division to focus on the future. Ford says it aims to build 2 million EVs by 2026 when new factories come online. Then there's VW, the German giant leaning in hard with this ID sub-brand of cars, revealing the ID7 just last week at CES. Volkswagen intends to have 25 new EVs on the market by 2025, and some of those models will be made right here in the US, meaning they'll qualify for those all-important federal tax cuts.
Now, in addition to competition, there's the issue of Elon Musk's empty promises in the past. So can he deliver on those, Pras?
You know, Brad, there's been a lot of vehicles here and kind of brought up in the past, like Cybertruck, right? Cybertruck was debuted in 2019, was supposed to come out in 2021. But we will likely probably see it this year. We'll see. The Tesla Roadster, right? This is this $200,000 supercar that came out, again, debuted in 2019. We haven't heard much about when it's going to come out. And it's probably not going to come out for a while, and they've already taken huge deposits on that car. And finally, the Gen 3 Robotaxi, the cheap Tesla, the $25,000 Tesla that Elon Musk has talked about, brought it up in 2020, said last year, actually, we're not going to make it. And now we're hearing that we're going to actually see a potential platform or what it might look like at their investor day on March 1st. Again, if we see that, who knows when it'll actually come out in the future?
I know when it's going to come out, when it needs to. No, really. I know that sounds simple, but that's actually the plan. Tesla's going to produce and sell as many Model 3 and Y as possible. I think globally, maybe 3-4 million units per year combined, mostly Model Y, a few Model 3s in there as well. Using their large brains and actually thinking is assessing the situation. And when it is strategically the right time to announce the new cheaper vehicle, they'll do it. They'll already have planned the production systems, where it's going to be built. And I believe Tesla will make the gap between the announcement of this vehicle and first deliveries as short as possible, because many consumers who previously had ordered a 3 or Y might think, fuck it, I'll just get the cheaper one. It's not that different, right? Tesla already has this vehicle up their sleeve. They've designed it, but they're not going to bring it to market until, ready? They need to, and not a moment before. This is a very simple but important point to understand.
Now, Pras, let's talk Tesla's car designs. Unpopular opinion, I quite like the look of the Cybertruck, but while the overall designs are attractive for the other models, they are long due for a refresh, aren't they?
Yeah, you know, just looking at the models right now, they're all kind of long in the tooth. The Model S came out 10 years ago. Usually, automakers every 3 to 4 years will have a refresh and then a full redesign in 7 years, right? So the Model S came out 10 years ago. We saw a refresh of it last year. And the Model X SUV, that came out 7 years ago. Again, a refresh last year. And the Model 3, it's been out for about 6 years or so. And we were hearing reports that they might actually update some like interior components, not a full refresh or a minor refresh. So, you know, these models are kind of still a little bit older. People are still buying them, but at a certain point, when new cars come out, you might want to take a look at those.
Just to make sure everyone is on the same page, Tesla doesn't have model years for their vehicles. They continuously upgrade and improve, add new components, add new features. Occasionally, there'll be a major refresh as well. But unlike automotive manufacturers who have vehicle model years, the 2023 version of this, that, or the other, Tesla doesn't do this. Rather than following the herd and doing what everyone else does, they thought to themselves, why would we wait an entire fucking year to make our vehicles better when we can just keep making them better every time there's an opportunity? Often you'll hear this narrative, Tesla's Model S came out in this year, hasn't been refreshed, hasn't been updated, blah, 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 blah. Apple's iPhone came out 16 years ago and hasn't had a single major refresh. Just incremental upgrades and improvements the entire fucking time. It's important not to put Tesla in an automotive manufacturer box and assume that they need to do everything exactly the same as everybody else. If they did everything else the same, they probably wouldn't be getting unique results.
Now, Pras, I'm old enough to remember when you scooped me from outside of our office in one of those luxury competitors out there, in that Mercedes one, but there are plenty other luxury competitors that are popping about. What do we know about those luxury competitors that are really entering into the fray?
You know, Brad, that's funny. That was a fun day we had with that EQS. But you know, Tesla doesn't break out their U.S. sales, but Automotive News has new data that shows they actually passed BMW this year as the top luxury brand in the U.S. overall, not just EV. So you know, Tesla's in a good, enviable spot there. But like you said, Mercedes with those EQS models. Brad, I actually have the EQB SUV, that small SUV. I'm picking it up later today to test that car. So that's a small EV SUV. So Mercedes coming on strong. BMW with the i4 and iX. Audi with its e-trons, right? So there's a lot of competitors coming on space in the luxury EV space. And Tesla, like we said before, it used to have the kind of the run of the road by itself. Now it's kind of being joined by a lot of new cars on the road itself.
And since this field is so crowded now, I mean, will people still be buying Teslas? You know,
Rochelle, I have to say that is a yes, because we've been just talking about earlier today about those big price cuts that are going to make these Model 3s and Model Ys come under that price cap for the IRA tax credit. That's a huge kind of demand sort of push for them. You're going to see that happening just this quarter. But I think the biggest factor here, Rochelle, is the charging network. The Tesla supercharging network is still the best in the country, maybe even in the world. And I've been seeing a lot of reports, people very upset with EVgo, Electrify America, all these other charging networks, things broken, not enough chargers. You see plenty of superchargers everywhere that you go, and they're usually empty, and they're pretty fast. So I think that's a huge factor here, pricing, and then also that charger network.
Pricing certainly plays an enormous role. The supercharger network also makes Tesla a very compelling choice. But the truth is, the real reason is actually the vehicles themselves, the technology. There's nothing else comparable. We heard about some of the luxury competition. Have you seen the steaming piles of excrement produced by Audi, BMW, and Mercedes? They suck shit. We just heard Tesla's now the #1 luxury automotive manufacturer, not just electric, in the United States. Tesla's already doing luxury better than the luxury automotive manufacturers. And that's not even their market. Tesla is a mass market automaker now. In fairness, they're in the process of getting to the ultra mass market, but this is their goal. Start at the high end, drive the cost down, produce more mass market vehicles, prosper. It's important, in fact, critically important to understand. Tesla isn't competing with BMW, Mercedes, or Audi. There are consumers who would have purchased one of those who opt for a Tesla instead, but that's not the market Tesla's going after. The fact they're capturing sales here, cool story, bro, but that's not what they're going after. They're going after the mass market. Tesla doesn't give a shit what BMW, Audi, Mercedes are doing. They don't care. It's a sideshow. Over the long term, Tesla will be selling 1 million+ units per year of most of their vehicle models, some of them 4+ million. The more affordable Tesla will probably do 8, 10, maybe 12 million units per year alone. This is where we must focus when we're understanding Tesla versus a so-called competition. Who else is aiming to produce extremely compelling, highly profitable, affordable, mass market electric vehicles? That is how you compete with Tesla. So what's the lesson in today's video? Well, as Tesla continues to execute their master plan, you know, the one that's literally on their fucking website, they will continue to drive the cost of their vehicles down by reducing costs in manufacturing, reducing parts and processes, scaling up production, buying materials and parts in bulk. And as they do this, their already industry-leading profit margins will expand, giving them the luxury, the option, the choice, should they choose to pull the lever to reduce prices on their vehicles by a small amount to create an exponential increase in demand. This is a never-ending process. Tesla will continue to drive the costs down, pass these cost savings on, lower the prices of their vehicles, and sell more vehicles. It's actually very simple. As I've mentioned in the past, there are very few other companies on the planet, and outside of China, none, who are making any money selling electric vehicles, period. Yet Tesla has superior products for equivalent or cheaper prices with huge profit margins. In short, this story does not end well for anyone other than Tesla. Most of the stock market has not figured this out. Most of the so-called industry experts have not figured this out, and many automotive companies themselves have also not figured this out. But that's their problem, not mine. One thing's for sure, for the automotive industry, the remainder of the 2020s are going to be anything but boring. Imagine that. Lower costs, pass on savings, sell more vehicles. And if you'd like more content, over 270 exclusive videos and counting rapidly, head over to Patreon. You can join with the card in the corner or the link in the pinned comment. If you're curious about Tesla's pricing strategy over the long term, Patreon supporters also have optional access to my Tesla valuation model, in which you can see the average selling prices I have for Tesla over the next 10 years. These are my best estimates of how much Tesla will be able to drive the cost of their vehicles down, how much they'll be selling them for, and what kind of gross automotive margin they'll achieve on these much cheaper vehicles. So, see you over on Patreon. Love ya.